Welcome, lovely people. Yeah, we're back with you on the Market Sniper, talking about traditional markets, talking about the commodities, talking about the indices, talking about a couple of things. It's going to be a broad catch-all for a lot of traditional markets. And what are we going to be referring to today? Well, we're going to touch on coffee. We're going to touch on oil. We're going to touch on natural gas. We're going to have a look at those languishing precious metals, the Nasdaq index that keeps marching on. Essentially, what I'm going to be talking to you about is the main base point is fiat devaluation trade. Are you ready to do the fiat devaluation trade? And how are you positioned? And where are you getting your best rewards currently in terms of that? I'm going to take you up to a previous YouTube we did up over here. You can see the date, a man in a Violator t-shirt there in dark blue with a red rose. And he's talking about on the April the 28th about coffee being one of the black commodities matter. Yes, black commodities matter, he said. I don't know if you should be allowed to say that. The thought police will be with us soon, I'm sure. But you're saying coffee and oil and other aspects of the great inflation trade. And we were referring particularly to those two energies generally, more broadly, because we're going to touch on natural gas, which is obviously not oil. It's often sometimes a byproduct, and in some places in America, because of the ability of storage and all of that, it gets burnt off or was wasted until recently, and it may still be like that in certain areas. But natural gas was quite interesting. But let's kick off with the agris, because we don't always do a lot with the agris, but we're going to come right the way through into the indices as well. The Nasdaq that marches on. Don't forget, by the way, there is a FOMC tomorrow. They can be choppy times. The FOMC, the Fed speak. They'll be talking tomorrow. However, the expectation is the following one. When they're in Jackson Hole, they go for a nice, jolly and beautiful places. Always in 5-star hotels, thinking, pondering and living the good life and chatting the breeze and texting Nancy Pelosi her next best trades for her to take and jumping into the markets, no doubt, for themselves. Did you know, by the way, a previous Swiss National Bank's wife was involved in shorting the euro Swiss franc? That's right, an amazingly good FX trader. She caught the collapse from 1.5 all the way to sub 1 at one point, and then the rally back up where they set up a floor. We were involved in calling those technical trades on the euro Swiss franc in 2009, before anybody had heard of the Greece or the pigs European crisis that then led to the great movement of money. And your central banker friends were there putting on the trade, or at least their wives were. Now we find out what a legendary trader Nancy Pelosi is, with her Sabbatean Frankist husband, and how much they're making with all their options on the Nasdaq. So we'll have to go take a look at the Nancy trade on the great Nasdaq. I've got a couple of comments in there. Oh, by the way, I'll be in a contest tomorrow against Boris. That is, I think I've shared the link. Follow my Twitter account. We'll be trading against each other on Friday. Also talking about how we see the markets, and we'll have a short time frame aspect to that and a longer one. Go check it out on themarketsniper.com. I will retweet that link, and they'll be tagging me in on it. Trader battles, the contest. But let's talk more about this chart. Robusta coffee. Here you go. You're looking at it now. April 28th, we were telling you black commodities matter. You want to be long oil. You want to be long commodities. That is before May, roughly. May is over there on the chart. Give me my pen, please. You're around about here. We were highlighting the squeezy, Japanesey. You remember, you heard that here first. All my catchphrases getting stolen from me. I have to come up with new ones. I should register copyright. So there you go. Just before the end of May, you could have got in there on Robusta coffee in and around the 1400 level. You're now looking at 1930. That's almost, call it 1500 to 2000. It's almost 25% move. We had done the draws for you. There was both an HVF. Yes, a hunt volatility funnel setup. You can learn how to trade these better and more purely. Many people think, I've watched your YouTube. I've got everything for free. I know what I'm doing. Thanks for what you've given me. I don't need to pay nothing. Good luck. You can learn to do everything better substantially. We give quite a bit away for free. There is so much more behind that. And the implementation and the proportionalities and all the detail, the trend analysis, all the macro, plus all the other setups you're missing that we are posting with our amazing community that are with, in the chat, I'm hoping, as part of us. Be part of an elite sniper squadron. This is your wealth building season, people. The fiat devaluation trade is absolutely on, and it's going to have surges in certain areas. Here's what most people realize. Let me just stop and do a short sidebar here. Look into my eyes, fantasize. The man will preacheth from the pulpit, and we will say goodbye to the chart for a second. Here's what's going on. They are killing currency. All the things we tell you on Reset Sniper is in fact happening. They are going to basically go UBI. They're going to make social credit scoring systems. There will be passport IDs and verifications. If you want to do anything, you're going to be showing your papers like a good gulag citizen. And here's what's going to happen. You're going to have an opportunity to make money during this process so that you can be a wealthier slave in this slave society. They are holding all the great levers to how this will be run. You really need to max this out. The quality of your life will become huge. There is a massive middle that is going to be destroyed. And there will be a multi-millionaire, multi-millionaire to billionaire, trillionaire class. There will be a hollowed out middle that will probably have huge losses in terms of head count. And there will be a drugged up, you will be happy, own nothing class. It is absolutely their intention. They have suggested it, and you should listen, because a lot of things that get suggested ended up happening. Now, I'm not going to go full reset on you. I'm going to leave it there. Some people get really agitated. We keep predicting on that sense, and I say predicting, it's often just reading what they're telling you to do. So it's not like we're so smart and so genius, and things keep going that way. That's what happened. We are the people that called single-digit oil and that ended up and go long gold at the same time for a major commodity pivot that was one of the best trades ever of 2019, along with pipelines and all of that. We're getting some of the stuff right. That doesn't mean we're always right. But on the macro, we are very accurate. On the shorter time frame, it's harder. They can create a little bit of a counter trend, which they have done. So those that were the deflationists, we're going to tighten, we're going to reduce the balance sheet. You're not. No, you're not. We've heard this all before, guys. You've got to get to the script. Don't believe a goddamn word they say. They're trying to not let things get disorderly. And the coffee market is saying to you, it's getting disorderly. Listen to what the charts tell you is happening in terms of the markets, not what your Federal Reserve chief Satans are trying to tell you isn't happening. So you had a good left shoulder here, kind of doubled up, as I've illustrated with the jaw. You had a macro head there on your coffee, and then you've got your upside HVF. This is classic textbook, and we teach you this. All you have to do is go to the link, click, book a call, and decide if you want to get better at maximizing your wealth in these reset times. Because across the board, the fiat devaluation trades is going to be expressed in different markets at different times. And it's possible. They're not all going to be in the sprinter blocks. They're not all going to go up simultaneously. They're not all going to go up by the same amount at the same time. It's not like the 10 fastest men in the world running the 100 meters and they're all within a couple of meters of each other and they're all running at close to the same speed. They're all hitting out of the blocks at close to the same time, and they're all getting through the 100 meters somewhere between 9.5 and 10.1. It's not going to be like that. What happens is you get a story. There's a shortage in coffee at the moment right now. There's a bit of it. And there will be a slight bit of a narrative. But in that trade, you will get a huge inflation readjustment component, which is the main part of the move. Because supply shortages don't last forever. You might have a flood, you might have a drought, you might have a bad season, but that is typical variation that you've had for decades in the world of agricultural supply. Then you'll get a narrative. Note how oil was super strong. It pulled back recently. It fell from around 75, 76, a full $10. bit of the Fed is going to cut back. What happened? Natural gas during that period was in an upside, HVF going up. Did you know that? Were you in that trade? No, you weren't, because you weren't in the community, you weren't capturing the setups, and you aren't watching 360-degree view. It's very hard for one man to have an eye on all markets at all times, especially if you've got a job, you're still working, you're coming home at night, you're snatching an hour here and 45 minutes there to check a few charts. You have a few favorites that you made money on before instead of looking at all of the markets. It's very, very difficult. That's why being one sniper alone in the bushveld all by yourself, having to try sleep, eat and survive and keep the wolves away at the nighttime is much harder than being in a community where other people are capturing your back. You don't have to watch everything all the time. There are people around the clock all over the world. Book a call, grab the link below. Anyway, so that's what coffee's done in the meantime. This is the Robusta, which is the more strong, less sensitive tree, which can cope. The Arabica is required to be a certain meters above sea level and not too high. There's an ideal elevation for the growth there. It's also done very, very well. So you go to the Kansas markets and the futures there. But this is what's happened. You've had a 25% movement in bean prices. And no, that's not farmers getting a whole bunch richer. That's the fiat devaluation. There, literally, I've left the drawers of the previous chart, and you can see there's quite a lot of similarity, obviously quite a degree of correlation, and these markets have bottomed. What's that drawings that you see there? Well, allow me to show you. We called this in Ethereum and Bitcoin, by the way. I should have drawn this on the log scale, so I'll slightly fix it. I think it was drawn when I was in regular scale. Let's have a look. There's your regular scaling. Generally, when you start to go up to the bigger time frames, you should transition to log scale. But this is a falling wedge break that we've already indicated quite some time ago. We did the YouTube in April 28, but we told you even before that, this was drawn a long time ago. Let's give you the monthly chart, give you some perspective of what's coming. Why are all these things breaking to the upside? Fiat devaluation trading, guys. Lumber, you will say, but lumber came so far back down. Of course it did. They tried to control it. It was causing too much chaos in their housing market. Of course it got pressurized back down. The long-term trend will still be up. But look at coffee. You need to be in the right trades at the right time. If you held lumber all the way up and all the way 3/4 back down, you've left a lot of money on the table. You wanted to be pivoting out into coffee. Look at that. Little squeeze, break the falling wedge, big move up. Do you want to buy it now? No, that's a gap up and a blow off, probably brought about by the short time frame, medium time frame supply shortage. That will also get a little bit of a lumber pullback moment, bringing it back in. You want to be back here getting ready to buy somewhere there potentially using traditional technical analysis methods, and even better still, hunt volatility funnel methods with key levels of significance brought here by checking on the lower time frames the structure and levels of that pattern using a combination of volume by price, volume histograms below, volume by time, small time frame and medium time frame pattern structures, key levels of significance of previous HVFs, round numbers, and a whole swathe of techniques that you will learn trading with us. And that way you will get back long there. You can buy an ETF, you can buy equities that might benefit or be correlated. There's many ways that you can do these things, whether you're trading energy, oil, or even coming through the agris. This is an inflation trade. This is an inflation trade. Will there be deflationary and panic moment events? Absolutely. As they seize control globally and everyone now realizes that there's very little difference between all your governments that are all being macro managed, you will break. Here's the prediction. If you want big time frame calls, look into that telescope up there, way up there in the sky, big time frame calls, you will break and hold and stay above levels you have never held above for any serious time frame. And you will go parabola in instances for a certain period of time as well. Yes, there will be harsh sell-offs, just like I was describing in the lumber market, just like I'm expecting could happen in the coffee markets. Don't rush in right now. But in the long run, you will be trading through this and going up. Why? fiat devaluation. Fiat devaluation. Oh, you don't have to go, oh, but we haven't heard anything. Wait for the next 10 trillion stimmy pack. They've set up a reverse repo market for dollars in outside offshore for the euro dollar market, which is for everybody else who needs dollars in other countries. Yes, sir. Yes, sir. 3 bags full. You are going to see devaluation. What about UBI and stimulus? UBI is definitely coming. All the things we predict in Reset, which we've been predicting for 5, 6, 7 years, have all suddenly started dropping right now. Now, you either think that it's just plain lucky, or you recognize that we've got their playbook, or they've given the playbook to us. You just have to read the right materials and join a few very simple dots. So we don't want to overlord ourselves for that. We're just regurging back what we can see they are probably indicating, and in some cases outright admitting in terms of intention. You will be on an ID system. They will have facial recognition. They will be using all the technology that they are getting out of your tech oligopolies and monopolies against you for pinning you down, track and trace, total surveillance, and knowing and profiling you right to the nth degree, absolute control. And they will be using the tech oligopoly against you. So you may as well make money in how it's going up, and we're going to come to that Nasdaq market in dealing so. In time, though not to enter now, this could pull back. You will break that 270 level, which has been what I call a tops and tailing exercise for a multi-decade, 1974. And here we stand in 2022, and I'm saying to you, multi-decade range that has been no more than 670, call it, dollars to 270, most of the time pivoting around 170. 70, 170, 270. There you go. That's your range. You will, in time, break way beyond that 270 mark, and it will be volatile. And that is trading the loss of value of fiat currency. So that's a little bit on the coffee. What about energies? And I mentioned natural gas. So at the same time, on the 28th, we told you you want to be long the black commodities, aka oil, the biggest one. And in fact, if you want an idea about a black commodity that has escaped a range and traded at all-time highs, in case you're having problems believing what I'm saying about coffees, Arabica or Robusta, because I'm saying it about both, here is your oil market trading from the $35, $10 range from the late 70s, 1982, till 2004. That's a long, long time. It goes well past the 70s, even the 60s, in that range. In that range. Not breaking the 35 for much longer than a shortish period in the larger scale of the fact that we are already on a monthly chart. Then Mr. Greenspan's Goldilocks economy, and then the property inflation boom that he created, and the super tax went, the Rockefeller tax went through the moon, and this is on WTI at 145. Bang! That is a super pump. That is oil as the taxation on your activity globally. You think you haven't faced a global tax with all the money going to a global cartel? You're already in your new world order, my friend. You've been in it longer than before. They've been hiding, and they're showing their face more and more than you've ever seen before. You broke that range. You then supported on it. You had a capitulation through that range in an exceptional case. And if we go back to the April 28, and we spoke about oil many times before, previously on the short side until the pandemic occurred. Let's show you how you've done. In spite of that sell-off that occurred recently, had you been getting in on oil round about the April period, you have been in and around there, and you are net up. We did also say, when you break a key macro falling wedge, there is usually one point where you have a clear pullback return move in the direction of back towards the wedge. I would say to you that that is probably it. Could it happen again? Maybe. Could it go lower? I'm not sure. Right now, little bit of a rising wedge. I think it's not going to do too much. It's not a chasing trade. But longer term, a little bit of a rising wedge there. But longer term, quite potentially further up in due course. So as long as you're trading the macro time frames, and when I say trading, I almost feel investing. For those of you that use leverage, you've got to be very specific and very clear on your timing. This is the key thing. You've got to be timing right when you use leverage. You've got to be timing right. This is a walk up. I think we're going to get back up in towards these higher levels. By the way, it was becoming clear that we were getting a bit choppy. You can see these structures that we were drawing over here. That's a broadening structure on a bull pole, and it was an ascending broadening structure. We teach, nobody covers this. This is our theory. You can hear about broadening structures, megaphones, out of traditional technical analysis. There's no splitter. This is our supplementation that gives you clear guidance that the megaphone had an ascending tilt to it. That is all our theory. On a bull pole, you will learn about descending megaphones. On bull poles, you'll learn about bear poles with ascending and descending megaphones and the directional expectation. Why that is, you'll understand the theory, and this is why you got to bounce to your splitter, which is a secondary, not a full lower, which is a basing descending grind line to a full capping ascending grind line. You will learn that those names, which are specific to HVF method, which clearly define the subsectors and components inside the structure of broadening patterns. You will learn things that you will learn nowhere else, because HVF method is constructed, tested, thought about, written up, defined in a technical analysis arena for which there is no university, there is no training, from a practical trader of 35 years plus who really wants to understand price behavior and is writing it up so that he can also help teach other people to do it better. That's what you get. And there's your break. And you bounced on your grind line and you had your spiller collapse. Now you've come back, small little structure squeezy there, and you're bleeding up. What do I think comes next? If you want to guess, by the way, 75 key level. That's where you tapped out. Round numbers, pegging, futures, options, pegging at round numbers. 3/4 of the way to the $100 mark. Is it not a key level of significance? He says, with tears in his eyes. Yep. So I'm guessing a slow bleed up. I wouldn't consider this tradable. I would stay investable. So if you have crude ETFs, etc., or related trades, could be an equity, etc. By the way, equities on the commodities are underperforming the actual commodity. So given the choice right now that might change. You might have noticed that silver equities are doing pretty poorly, and silver itself is actually doing pretty poorly, but the silver equities kind of lagged silver recently. We're seeing that also in this. I have a PAA trade, which is a pipeline oil trade, and the silver's within a few percent of its previous high up top here. My apologies, the oil is at it's at about 74, but PAA is quite some way back. So there is a lag on the equities in the commodity trade. Not so much at all on our oligarchical, Bolshevik, communistic, absolute control structure, oligopolies, tech companies that are owning your data, that are owning your face, the Zoom that is capturing your voice profile, the entire perversion and scraping of your persona virtually and in a tech sense, and the monetization thereof, and their cooperation with dark state in holding over you. We will cover the Nasdaq, and you may as well take the money because that's coming. Now, many will say, but, equity valuations. Let's pivot from the oil. In fact, before I pivot from the oil, must show you the natural gas because we wanted to highlight that, and we mention it. Natural gas, it's kind of a silent force. Most people don't trade it unless you've been in the energy industry. People think of, they don't think of it near as much. So you have had, since the 28th, and in fact, our inflation, the big long we were talking about mid-2019. As we were saying, Bitcoin was going to resume going up. As we were trading long gold, we were talking about that as the oil at that point was actually having a re-rating in dollars because of the supply glut, because of the pandemic, etc. We were saying this is all still along. You had a macro on the natural gas. Like that. And that made target over there. And actually, as you were getting to target, you had a small, I say small, we're on a big time frame daily here, wind up. This is your second interim make. What happens? You get a little bit of a pullback and a rest. It's absolutely compliant to HVF method. And this is essentially very much a bottom call on natural gas. There's your floor right down there. And you have started a new bull trend. Let's show it to you on a bigger time frame and you can have a look. There's a lot of pressure on energies. Carbon credits will be coming to the fore. You're looking at a company like Tesla that has essentially made a large part of its revenue based out of getting credited for green. Anyway, while the billionaire climbs in his rockets and goes up to space. Isn't that funny and sweet? There was a bit of a top on natural gas. Down, down, down. Down, down, down. That is a secular low. Our expectation is you will bypass that 5 mark that you failed to reach on natural gas. You will bypass it. But do you chase it now? No. If you understand and you've learned HVF method, you never chase straight after a macro target has been made on a daily with a wind up that gave you just a touch more booster to that target. And now you have a confluence of target levels that you've just made. You never chase in there. In fact, you expect a possibility of a pullback. Remember, that was the bull. You still had that pullback that took back probably more than 50% of the initial move. Markets do not go up in straight lines. They staircase, and their staircase as an up and a down. Hence the classic ABC, and then when you get into Elliott, the 3-wave and the 5-wave markets up. So understand that. So now's not a time. I'm telling you what you missed here, not what you should do now. By the way, I'm non-advisory. I'm never telling you what you should do now, but I'm particularly warning you that chasing in close to highs would be not the smartest thing. So bear that in mind. Let's show you that on a smaller time frame, because this was trading. This is classic trading where leverage could have been used. Here's your smaller setup. And it absolutely confirmed you should take a rest once the secondary target was made. So you could have closed on the major, you could have boosted it slightly. But this is accuracy. You're getting a second call in, closer to your target that is saying, we've got no more. You get the conservative initial target. Often you get a wind up close to the target that boosts you. You're saying, okay, now we got a bit closer. We can give you a little bit more, a deeper scrape of the barrel. And then if you only get a little bit, a teensy weeny bit more, it's a case of, you got to get out, mate. You've got to close with your leverage trade. Super good risk-reward ratio, by the way. Risk-reward trading. Risk-reward trading. If you are to use leverage, you have to have a stop. You have to have a take profit to avoid being carried out. And to ensure that you get the money you deserve, the whole trade should be entered. As one idea, you make your best money while you're sleeping. That's a fact. I can tell you that. Most of the time, my best trades are closed while I'm sleeping. Or I'm doing something else. That doesn't mean you're sleeping. You might not be watching it happen, is what I mean. You don't have to watch markets happen. Go take that magnet off, otherwise it's going to keep messing me around. This is the risk reward in traditional markets as a trade that we called in our community, this little one that you missed. That's a 15. When last were you on 15 times what you risked? When last? I'm asking you. Give me a date in the comments. Where's my friends? In the comments. Some guys like, Jack likes the bicycle. Bike sniper. The economic system is cracking. Yes, it is. The economic system is cracking, and you get a chance to trade it and to take yourself into next level. You can be, some slaves in Rome were sent to go die and be eaten alive by lions, and some walked around largely free. and had a good existence. You can decide which level of slave you want to be. I want the best quality I can get, be a rich slave with lots of bought freedoms rather than a bad one. Okay, so 15.22. Most of you, I'm guessing, don't often land 15.22 trades. The focus on risk reward is key, but that's still a reasonable time frame trade. I'm on the 4-hour up top here. On our battle tomorrow in the great trading game, they want a 45-minute time frame on one of them. That's very small time frame. You need a 5-minute setup to have a 45-minute target. You might even need a 3-minute setup. Obviously, ideally, with all the macro trends already in your favor and some of those things, I'm not saying to you long term, that's how you should trade, personally. It's not my objective. Get the big wind behind you and get the main direction right. Swim downstream with the river. It makes you look better. It really does. You travel faster. Take it from me. No matter how good a swimmer you are, swim with the river. And that is the fiat devaluation trade for me. Some folk will call tops on the Nasdaq, and I say good luck. You got to nail it. You could go 6 or 7 times and be convinced, only to find it goes higher. Here's why I think everyone needs what I used to call an FU portfolio. You may as well own your slave master equities. That's the chart. Many people will look at that and say, it's done too much, I can't pay those prices. Yes, if they do the Klaus Schwab hack, you could have a highly deflationary event, but I will warn you again, divide by M2, the valuations are not near as high as 2000 yet. And we've done that. You need to hold Schmuckbook, Schmugel, and all of these guys. Hold your nose while you buy it. Drip feed monthly in as an investment. Your best money is made on your longer term time frame with the trend thinking. It's not in the leverage trading. The leverage trading can give you occasional quick hits. It's like a boost button on your car. The turbo, and then it's over. The main speed, the main travel, the main things that are taking you from A to B are not the boost button. It's your positioning. It's your positioning to the macro and dropping that down across the time frames, standing back on the counter trend moments. You just had a little bit of that with oil, with the Fed supposed balance sheet wind back, the other blarney and nonsense that they might talk, but in the long run, be on the fiat devaluation trade, which is largely more inflationary spoke. Let's just divide this by the M2 and re-show you that valuation comparison. You haven't yet met .com highs. That doesn't mean it's striking good value. It's atrocious value. I prefer crypto, personally, but it's a key point that you are not at the valuation. For the amount of new money that's been proliferated, you've not yet made the .com highs. That said, remember at the .com, you have a blow-off to tell you when it's all gone wrong. The worst thing that happens to you is you get totally drugged by an absolutely mooning market that you forget that it's the beginning of the end. Let me say that again. You get drugged by a totally mooning market in your stuff view portfolio of shares that you go from round about here when you're at about 0.23 valuation to monetary value to smashing it up to 1.05. This has been, whilst we live in an exponential world, that's what Raoul's phrase, the technological scale, the AI, the machine learning, technology is the new financial sector. Financial sector used to be small. Then it bullied its way into everything. It was housing, credit cards, everything. Used to be a small sector generally, never super small. Remember the bankers to the kings and queens. But it got oversized. Technology is a different level of potential sizing. Everything will be robotics, tech, and AI. This is your everything industry, including your slave management system for the dark state. But it is your everything industry. It will do almost everything. In case you missed the word everything, let me say it one more time. It's going to do everything. And it'll do it better, faster, in time. It will machine learn a more dynamic way. So this is going to be absolutely huge. And the big giants in that space are gobbling up any new industries of potential. They'll either bury their ideas so that they don't compete with their own, which is typical how innovation gets destroyed, kind of how Rockefeller cancelled battery cars way back in the 30s and again throughout the 70s during the OPEC crisis. There were many people ready to deliver battery-driven cars. You've had battery-driven go-karts for ages. Why did it just stay in golf? Because it wasn't allowed. They weren't allowed on the road. There weren't going to be cars. No research put in there. We will not let it happen. California blocked the Mercedes A-Class from being the battery car it was designed to be. Then it was converted into an internal combustion engine and fell over at every corner because it was designed with a slab side because it was going to have a low center of gravity with a battery in it. That was the last time, a decade and a half, 2 decades ago when it first launched. So that's the facts. Real innovation gets buried if it challenges control structure. They buy it and they kill it. And some of it gets bought and used. But this is the everything industry. You want to catch it and call it short. It might sell off before the high. It might sell off 2 or 3 times beyond that high because it's going to be bigger than anything. You will not even clean your own home. Your bot will. So there's lots coming. There's lots coming in this space, and it's going to keep escalating, and the big giants are going to get bigger. Drip feeding monthly in there as an investor tool is a smart idea. If it crashes, you will accumulate more equity in the crash. You could have accumulated all the way along during this period and believed you would already be hugely in the money by here because your net average value of accumulation would have been somewhere down there. That is the game. Investment is underrated on trading channels. Leverage kills most traders. You do not know how to use it. You've got to earn the right to leverage. You've got to learn patience through investing and earn the right to leverage. That's where you should be. Okay, let's have a look at some comments. What saith the masses? We have 273 people and 94 likes. That's about 1 in 3. So the rest would prefer more adverts, more vaccine promo adverts ideally, and also less truth, I'm assuming. If you will like a bit of truth and you appreciate no adverts and you want to join our community, click the link, give us a like and give us a share. I've got other markets I want to talk about. Hello from India, says the Arrow. Yes, the Arrow is our big friend. We know the Arrow. The Arrow from India. Cal, what else are the comments saying? Is CDRDN is the most rigged market that exists. I'm not sure I know which market that even is. Is it platinum? So we're going to do precious metals. So let me crack on. So the precious metals have been poor, having had that huge macro HVF on the pound and the euro gold charts, which took silver and gold and the precious metals up beautifully while oil was collapsing, including they also had a sell-off in the pandemic, which they later shrugged off. They've since been pretty poor. But we've had a bit of a bounce back today. It's been a bit skittish. This is a marginally higher high. Now, I always want to say, if you divide these, and I've done full YouTubes with this, so I'm not going to go deep dive on this. Divide these by M2 supply, like I showed you for the Nasdaq. Divide them by inflation, according to BIS's stats, or BLS, the Bureau for Labor Statistics. Is it Labor Statistics or what was it? The American one. I'm missing my acronyms now. And then do it by shadow stats as deflator for inflation, the CPI. And you will get a feel for how deeply undervalued precious metals now are. Deeply undervalued. Despite this, I'm not excited about this marginally higher high. It's a little bit of a disappointment. You could get a tricky pattern, which could be an ongoing rising wedge, which could then lead to a squeeze up. And you can actually break out the top of rising wedges. They don't only mean down. and there's unique set of circumstances. My personal assessment is that gold and silver will be one of the last allowed to run. It will be once they no longer care and everything is clear that you're in a hyperinflationary environment. The CPI is, we're having a whole admittance of a fiat devaluation. When the central bankers are now admitting that the fiat is gone, then it will go, go, go. So that could be a scenario for how they go up. And it's a tricky one because if you are a support and resistance trader, which is deadly in these circumstances, you go longing the top and you get shaken out in the pullback. You long the new top over here and you get shaken out on the pullback. You long the top over here and you get shaken out in the pullback unless you get a pop out and a run. So it's a grinding way up where most of the buying is coming along the basing ascending grind line of that rising wedge. So it's along the base, it has an ascent, and it is a grind line, not a trend line. The trend is up. You can have falling wedges with descent, and you can be in an upward trend on a macro level. So let's have a look at silver. In fact, the silver-gold ratio was getting a bit messed around, with silver being slightly relatively weak, although now it had a little bit of a better overnight session. So we've shown you this one before. We did a cutout on that Wall Street bet pump. We have shown you that draw before and said, well, there was a squeezing. I want to just highlight that was a nice falling wedge on your down leg there. This was a similar falling wedge. So actually, silver right now could be in a 3 impulse HVF still and getting ready to do something a bit more encouraging. 1 impulse, let's change color. Make a fat Cokie. Who doesn't like a nice fat Cokie? There's your falling wedge with 3 impulses there. So you got inside this macro squeeze of 3 impulses, you actually have falling wedges with 3 impulses too. You'll learn how wedges are the close related cousin to HVFs, Hunt Volatility Funnel Methods. They're not quite as good, but they're close. They've got some good gene in there. They just need a little bit of help. How do you manage for them? How do you trade them? You see that? 1, 2, and 3. 1, 2, and 3. And they get smaller. And what are you doing now? You're having a bump. So actually, silver could be in a little bit of a recovery point. It got properly blocked at the 28 a couple of times. Key level of significance. This structure could be the wind-up structure to see 28 eventually fall. You couldn't hold it for any sustained period. Remember, key levels of significance are usually just run. It's a key point. If 28 is a key level in people's minds and they have pending orders at 28, they can't all get filled at 28. The market runs through because the pending orders suddenly become live market orders at a key round number. We talk about clustering, order clustering around round numbers, and the voids and the vacuums just before. Nobody puts 2797. They all just put 28. So you actually have a dearth of orders stacked on the small numbers just before a key round number. So you get acceleration through a void on the bid and offer stack through the key level of significance. Do you understand principles of trading? This is thinking how the markets truly work. This is HVF method. This is why we have rules based on real price behavior that is absolutely observable on the markets, in the charts. Logic, rationality, that is applied. And you can get that experience too. And you can learn these principles too. And you can observe them happening as and when it occurs. So there you go, silver. Actually, you could be getting it at, that was your low 1, your relative low 1 here of a possible structure, that base plated low. You've got a possible relative low 2 at the end of your second impulse, that was your first. And now you have finished your third impulse of a possible upside structure. It could also be, if we get a deflationary track, it could actually be first in a new trend down. Do I feel that? No, not really. Not really, but it can be. Depends what day you wake me up. If the Fed tries to do something or we get a big hack out of the blue, that can happen. So remember your fiat devaluation. They have trained the bankers and all the responders to rush into dollars and US Treasury based debt as a fear refuge. It's the panic room for the afraid. So when they do a macro hack and people lose a whole bunch of money and that takes a massive amount of money out of the supply chain and a lot of people are butthurt and they stop spending and they sit at home and they mope and they cry, what ends up happening is a flood of money goes into the alleged safe havens. The safe havens are not true safe havens long term. They are guaranteed loss havens, such as the US Treasury bill, which in terms of real rates, CPI, and all of that is only going guaranteed down in terms of the yield it pays you, and will probably likely never be paid, and there's an endless flow of debt to come. This is a debt expanding Ponzi scheme of great scale. So overall, whilst you might get those attack vectors that can see a stab down in all your anti-fiat trades, in other words, trading the fiat devaluation game, as long as you're not over leveraged and caught at the wrong moment, you generally should be fine. If this falling wedge breaks, you could have a nice move back and you could find yourself in not too far off in the future tapping up against the 28. And guess what happens? After once, twice, 3 times a lady, you typically break. And the targets are in the medium sub-mid 30s, 33s, 34s. We've done this draw before, and you can get all that detail in far more detail with volume by price analysis and watching it in our community. Book a call on the link below if you want more of this in greater detail. So that is silver. That is silver. It's a key moment. Just like, and isn't it ironic that the ETH falling wedge, the Ethereum, the biggest alt, and the Bitcoin falling wedge have also in the last few days. Everyone wants to turn one against the other. These are anti-fiat trades. They are positioned as anti-fiat trades. At the moment, you can't print extra Bitcoin, Ethereum, and you can't print extra silver ounces. But you can create as much fiat currency as you like. You want both these trades to win. As we watch the useless fiat over-proliferated benchmark die. So you want to be out of that and in here. And that is our take. So whilst it's been a frustrating time, essentially to many people that are very non-detailed, this has just been a big range trade. Well, actually it hasn't. There's a constriction going on in there. There's a little bit more detail to the trained eye. There is a constriction going in on there. And as I say, I take an exception square to the Wall Street bet events. And I just say, that was just a little bit of FOMO. You're allowed to do that every now and then. Don't do it too much. But that was just about, way. But overall, we are tightening. The pink lines are what is going on. There is an impulsive move. And you've just had, or currently having, as I've already said, a falling wedge potentially breaking on the silver. So what about that silver gold? So we covered precious metals, we covered coffee, we showed you a little bit on oil. What about that ratio, gold-silver ratio? 337 watching. Thank you for coming. Hope you're enjoying it. Hope you're enjoying it. Are you trading the anti-fiat, the fiat failure trade? This is your chance to build wealth in reset season. It is. It is your chance. What are you going to make of it? Marginally higher high here. A little bit of a channel there. It's getting a bit skittish there. Gold's had a little bit of benefit. Small HVF there. Long run, in my opinion, is this will trade lower. Does that mean it's going to do it right now, this moment? No, the macro. We always start on the macro down. Start on the macro down. You need a macro view. That goes right up to the monthly chart. We called this a blow off and a big reversal. You are here. Whoops. Give me my pen back. Last cycle, you got a half blow off and you got a major spill. But you mucked around in here. You can see that. You came down a bit and then there was levels. You mucked around before you spilled. This was a huge rising wedge. You had a blowout the top. There's your splitter. That's similar to that blowout the top. See how nice I scribble? You have a spill and then you have a rest. We've had a spill. We're at the 70. 70 is the key ratio level. You muck around like you did there and then comes the spill. So this trade is you're wrong for a while, for quite a while, and then suddenly you get to be very, very right. Time for some coffee, says somebody. Platinum, says another. Awesome show. Thank you. That's great to hear. Please give me one share if you're enjoying it and you're learning something. That's all I ask in payment. Happy to share our take. Platinum a little extended now. And that's a little bit of an inverted hammer, not particularly bullish. Could trade off. Remember, it is deeply lagged palladium. It also had its own falling wedge structure, not as quite as tidy. And it has broken out of it, and in the long run it goes up. But that doesn't mean it's going to be one of the shooting lights, shining stars. It could dip a little bit. So the macro, not overly brilliant, but the long term, they all end up going higher. It's just a question of who goes up higher, faster, and by a greater percent. But short term, I think you might be able to get it lower down. Looks like it might rest. I would drop the chart to a lower time frame and say it just looks a little bit flat, unable to hold up so well. It needs a bit of basing time, I think. It's not about to shoot the moon. See that? I'm not saying that's a bear flag that will perform another down leg, but it might. It just broke, return, broke. A little bit iffy. I'd prefer to see a double bottom, let it come back one more time and then come up, make a nice neckline there, and then you have something like that. A bit more clear and obvious evidence that it is now done with downside. It looks unspectacular. Its friend that we've sometimes reminded you about, Palladium, is not too different. Quite a harsh sell-off here. You'll remember that. Reinflate, top out, sell-off, and a bit weak. A little bit of a grind line there. They aren't looking unbelievably that great. On this time frame, on the bigger time frame, after they've done correcting, maybe making a newer low and then coming up long-term higher. But right now, I think you can buy it for cheaper, lower, if you're patient. So not raring to go. Nothing raring to go. What about copper? We spoke to you also about copper separately in individuals. Setups, we gave you an 8. This one we actually gave you. See that? And here's what we're highlighting for you in this chart. We said to you, buy here. This one we actually gave to you. Stop here and traded. Target. You got it. And if you took off the table, you did great. Then you got a slide, an HVF slide. A broadening structure with a downside. What did it do? Supported on your funnel. Supported on your funnel. And it becomes a buy the minute it breaks out of the broadening structure slide. There's your splitter down the middle, and that's it. Again, small impulse, bigger impulse, final third impulse. On the third, away you go, and you actually traded the target again. There, key level of significance, resisted, sold off. So it will also rewind up. None of these metals, industrial metals, and even the precious metals are right now. I would say the silver possibly off a low, if you wanted something kind of ish. Maybe you could take a small move in it. But the bigger setups aren't ready to go right now. You can see that. So this is also just at a rest. But in time, this also becomes that. And you get continuation. So this is supported in all the right places. And it keeps performing to target. So that's copper. Copper trades also out there for you. Look at these damn tech stocks. We've got to show you that. We'll show you AG. First Majestic. Limping a bit. I've got a falling wedge structure at the moment in terms of this. Let's just go regular. Should draw it on the log scale, but that's where I am with this. So you could still go up and over one more time. Big, complex first impulse, second. So you came down, that's 1. This is 2. You can go up and over. You could even still have a downside one more time. But that obviously will depend on what silver's doing before you break. This was a key zone, 18 to 17. Apart from the Wall Street bets moment and a rebound there, you got stuck in there. Grind line, we drew that. We warned you it looks a bit peaky. Off, 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 off. I'm sitting with options. They're underwater at the moment. I locked in profits on my 22. I rolled them into a 2023, which was the furthest I could get. And those rolls all took place over here, all in the red. Losing. That's right. All of them. I took 2 strikes. I took 17 and 20s. Red. Doesn't matter. There's 3 years. Or is it 2 years? So I've got time. Those are in kind of option investments, long-termers. And they dropped a lot of profit when I rolled them. So I locked in a lot. So some of that red is kind of like profit already received where I was getting in higher up now. So PAA, I think we showed you Plains All-American. Supporting in the funnel after getting a good run, but should be doing a bit better. Oil is a little higher, but it's a pipeline company. It's not oils per se, but it made its interim level and it rested. And it came all the way back and bounced on our axis. And now it's sitting here. So it needs another wind up again to get going, and it has plenty of time. And we have a target up here, still at 16. So we're still long Plains Pipeline. This was a $30, $27 pre-COVID company. So I don't think 16 is the end of the world. Okay, let's have a final check of the comments, then I'm going to finish. Yeah, coffee's been a ripper, John Shaw. You're spot on, mate. 22%, he says. He's probably right. I'm not sure whether which bean he's talking. I haven't measured it. Rhodium's been super strong, Adam. You're absolutely spot on. It's a bit of a niche market. It's very hard to trade. I'm not going to visit it. I show the chart every now and then. I don't have a code for the Nifty 50 that you're referring to, Ara. I think you mean the Indian market. We'll probably alienate a large part of our viewership, but we'll see if there's the India 50 on here. Which one is it? I don't know the code on TradingView. You'll need to give that to me. Sprott USA, Rick Rule says Adam Taylor. Yeah, he's a good guy. I have silver sovereign coins. Oh yes, by the way, thank you. I'm still stacking these. Who wants to see real money? I just want to ask 1 kilogram bars, which is better in terms of capital gains tax? I know coins are CGT free. So ones that have numismatic value, particularly if they're of the country that you're in, that double protects you. So if you're in the UK, Britannia's. If you're in America, Buffaloes and Eagles. But in the long run, I still think it'll work well. Look at that. Look at that. Ow. Ow, ow, ow. Are you getting? Are you getting real metal? And coins. Kilo bar. You can do your shoulder presses in the morning, 1 in each hand. A little bit of bench. A little bit of bicep curls with real money in your hand. How about that? The link is below to Pure Gold. Grab them. Make sure just to check your VAT situation with where you are. They cover some, but some might be past. But at the moment, probably the best value out there for me, and one that I've accumulated some mass thereof. Be careful where you store. Don't put it. I think unregged places are better than official places. You can get coins, as I say. You can buy per kilo. I keep one out to show you. I just like holding it in my hand. This is my demo one. It's here. It's all I got. Here, you'll be very disappointed if you came to steal. But this, I just like the feel of it. I just like the feel of it. Clean, wrapped, 4 nines. So absolute highest standard purity. Great stuff. Nicely packaged as well. So grab that link below. I'd certainly say I also use Bullion Vault for the internet version of it, but I'm pivoting more physical. So the pure gold is where I'd start. If you want to build up a kilo and you don't have the means, you can buy, you know, fractions of ounces of the internet gold, as I call it, because it's not the same. Even when you reserve a bar, it's still being held by somebody else. You get to choose. I would choose Singapore in Bullion Vault's case, but I think having it right here, I actually feel safer, even with that one right in my right by me. I know where it is, and I know where any others are. So go and have a look at that. So CGT, the question was about CGT. I know coins are CGT free, but how will you be taxed if you own your bars? Minimally, if you have arranged your structures suitably, is my answer. Talk to those around our structures. You can send an email to support to find out more about protecting that which you earn and how to keep it, if that is a question for you. So having some numismatic tokens, coins, yes, and also having a structure that keeps you safe from the devilish hands, that keeps them safe. Structures they created for themselves, foundations, company structures, certain offshore locations. There are very, very few, but there are some key options that are available, and you don't have to pay 30 grand to somebody else to find out how to do it. You can do it a lot more affordably. Email support@themarketsniper if that's an area of interest. So that was for Johan Buerta. Hani Boka Ven. Johan, can we get a decent ref this time and the TMO grow a spine? Let me know. This weekend. So that's Johan from, I'm expecting, South Africa. Francis, is the pullback in uranium done, says somebody. So we'll have a little bit of a chat on the uranium. Let's have a little look. I think I've got an ETF here, and I've got a couple of equities. So Uranium Energy Corp, and that looks like the ETF. So overall, I think they've had their, I think you've had, there's good signs and possibilities that the pullback is done. There's a chance the pullback is done. They've done this whole inflation, keep the inflation bulls at bay, and the Fed came marching out. They started to look very stupid. The only concern I have here for you, let me just make sure I'm in log scale, because that's the correct way to do this. The only concern I have here for you is that it's possible we're still in a broadening structure, that we didn't quite break out of it. It's possible. It was slightly more convincing on the regular scale, actually. I sometimes do both when I'm looking for a technical lean. It might be that we're on daily, that it's still. That just worries me slightly. I would have preferred if it had just fallen a little further, but there does look short-term recovery on the go. It's just a question of, is that over? It might be, but you might still be in a broadening structure. If this was like that, and we could say, okay, you've had your sell-off. You could be done. I would wait a little bit. I'd wait a little bit. As I said to you, copper not now, specifically an entry. With the exception of silver, Robusta coffee, not now. The Fed's going to speak tomorrow. I've warned you. It could, if you go and add leverage trades now and you get huge volatility in the Fed, no, we're really going to cut this inflation and this, we're going to cut the, well, and we're going to reduce the debt, and we're going to be doing all of these frugal things, and the market starts believing them for half a minute. You could have, again, another slap down. And they know their big fear is coming inflation. People don't trust them. People seeing the fiat devaluation. People are seeing the fiat devaluation, so they're going to try escape it. So if you, Mr. Arrow, you've got to give me an exact code on TradingView. You've got to go look at in NFTY 50. Okay, I'm not up to date on the comments. I'm just seeing it. They're coming up fast. So in IFTY. Equal weight. I'll go with the equal weight. So this is log scale as well. That was a great setup. You had a couple of great setups, Mr. Arrow. It's possible for all of you to trade the Indian market, by the way. It's still a big market. Couple of nice HVF structures. You're in a bit of a complex thing now, a bit of a weird channel. It's a bit weird. That was your COVID spill. You've had a good reflation since the COVID spill. Let's have a look at the more shorter time frame. The chart I'm getting is kind of blocky. There's lots of gaps on the open. So it looked like it wants to be a continuation pattern, but it's a bit messy. It might be a bit of a tabletop. It's got a bit thrashy here. The volatility is increased. Normally we like to see dissipation of the volatility. That was a big volatility event. We want to see dissipation of the volatility, a lower move. This is also extended for quite a big time frame, the second impulse, in comparison to the first. So yeah, I would reserve making any kind of opinion on that. It could be a continuation, but it needs to settle down and reduce volatility. If you throw a historical volatility on there, you can see actually the volatility is starting to pick up, which is not good for bullish. It's not good for bullish structures generally, but overall the trend is bull. So I think it wants to go up, but it might deceive you a little bit. You see that volatility just climbing again here. Should be compressing into the pattern, and it's expanding. But long term, I would argue up, but a little bit thrashy. I wouldn't chase in now. So that's it, guys. I think we got it. Let's just see any more key thoughts. Yeah, US 30 after Nifty. So I'll throw the Dow and the SPY on for the indices, just to cover that a bit more for you guys. The SPY, the big global American index, so it's quite a logical one if we have just done the Indian. And we can also look at the Dow. So as I say, regular sell-off spells, and you should ideally choose one of those to start your, if you have a lump sum, your lump sum investing. But in the long run, these markets go up. I would say to you, the tech is the big bull. So we expected... Go away, you, whatever you are. So here's our history with the SPY, because I've got quite a lot of historical annotations on this one. And I'm gonna, given whenever you do a long time frame view, again, that log scale is needed. So you can see a descending megaphone structure on a major bull. So you were a huge bull from the 90s. You were already in an 80s bull, which had a few rests in 1987. But the entire period from the 2000 blowout all the way through to the lows of 2009 was actually a long consolidation megaphone broadening structure, because you went marginally higher here. Fatal. It killed the support and resistance traders. New highs, new highs. Go long, go long. It's technically bullish. Down. New lows, new lows. Go short. It's bearish. Good luck. Good luck. Macro, understanding the macro that equities are a bull market should leave you open to the possibility that this was a broadening structure. It's a perfect structure to kill technical traders that trade support and resistance. They longed the new high that saw them get a real washout, and they shorted the new low. Then up you come. We said when you break this megaphone, you're going to go into a lengthy bull market. What did you get? Lengthy bull market. And you got a couple of sell-offs, each one bigger, shaking out the cheap money and new highs. I do not think you will build wealth shorting equities trying to pick the next crash regardless of valuation. You could be lucky and get it right once. Long run investment bull and put your lump sums in after a major fear moment of deflation. Simple as that. You will be well rewarded. And you can trade technically on HVFs. Like I just showed you a couple on the Nifty. They show up regularly on all the indices. And you can then use a little bit of leverage. And then you take that profit off. And instead of getting more greedy and doing more trading, you shove it into your blue pot investment and you show how disciplined and patient you are. That entire decade, 2000 to the lows of 2010, that only led to a new high occurring around about 2013, I think it was. So you went from 2000, 13 years, essentially of chop, consolidation, and largely bear market. And markets go up in staircases in simplest sense. That was your 13-year sideways market. Yes, they were full of highs and lows and action, but you needed to be long for the next up step and you're still in it. And as they print faster fiat, these side periods get shorter and the step ups get longer because the rate of fiat devaluation is always slipping. You're a monkey on a grease pole and it's falling. This has been a long stream, guys. Book a link below. You want to be able to get regular updates like this, not only on the macro, but right down to the opportunities on the lower time frame. For those are unique events where you can get higher rewards to tight risks, then we might be for you. You will have a chat with one of our guys and you'll check that you're not full of fantasies, but ready to learn, grow, and recognize that trading is a self-development program and that you will be reflected back in that mirror and your outcomes will be a reflection of you, what you learn, your patience, and your discipline. Nobody gets wealthy without developing skills. I'm sorry, doesn't happen. Everybody who's made a lot of money has specific skills in specific areas. It's time you skilled up. We'll catch you next time. Thanks for watching. Have a great time. To India, to America, to Australia, to all our supporting countries, to Britain, English language, to the Northern Europeans, the Swedish and Scandis that join us so often, the great people, Germans, you name it, we've got them all. The South Americans, yes, we've got a South America. I have somebody in one of those little islands where it's just a little bit of an Air Force base for America. Marshall, not quite the Marshall Islands, I've got to check. We have followers everywhere. Thank you so much for your support. We appreciate your shares and likes. We'll catch you next time. And trade the fiat devaluation, but do it at an investment level first and be very selective before you use leverage. Thank you so much for watching. Catch you later.